The top 3 monthly dividend REITs to buy right now. REITs are known for the steady dividend income and with the ability to grow a business at a high pace. But on the other side, they also come with more risk. The reason why I love monthly dividends is because they bring in a decent amount of money every month, which I use to reinvest. In this video, I'm going to show you real quickly some fundamentals of these 3 REITs and why I think every dividend investor should know them. This is not a deep dive into these stocks, but just a quick peek with some major fundamentals. And I'm also very excited to see what you guys think about these stocks, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. First stock that I want to discuss is STAG Industrial, a monthly dividend paying stock focused on the acquisition and operation of industrial properties throughout the United States. STAG Industrial is a 5.8 billion market cap company, and since this is a REIT, I'm going to use the price to FFO to see its valuation instead of the PE ratio. STAG has a price to FFO of 14.96, which is very nice. It could indicate that this stock is undervalued. Revenue is at 634 million, and in this graph we see that revenue is going up quite nice and steady, so this looks also quite good to me. Net income is at 234 million, which gives us a profit margin of 37%. And to me this looks really good since it's above the 5-year average, so margins are increasing. The thing that people love about STAG is the fact that they pay a monthly dividend. Dividend yield is sitting at 4.5%, which is pretty high and brings in a decent amount of money. Annual payout is at $1.46 and as I just said, they pay a monthly dividend of $0.12. The payout ratio displayed here isn't correct since REITs use FFO to pay the dividends. If we take a look at the FFO, which was $2.17, we see that the payout ratio is at 67%, which is pretty common for a REIT. So this looks all good to me. The 5-year growth rate is far from spectacular, but at least they grew the dividends for 10 years in a row, which is not always the case with REITs. Overall, a great looking dividend scorecard to me. The last part is about the price target. I'm using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. I fill in the assumptions and I hit analyze. We have a low price target of $25, a mid price target of $30 to $31 and we have a high price target of $37. I'm only focusing on the discounted cash flow value and not on the PE ratio, since this is not a reliable metric when working with REITs. To me, the mid to high price target is the most realistic one, so that could mean that they are within the buying range right now. A few weeks ago I bought a lot of new shares when it was around $30, so for now I'm all good. It's one of the bigger positions in my portfolio and I keep collecting the dividends. I don't want it to be my number 1 biggest position, but I will increase from time to time. At current prices it's a buy to me. Next stock on this list is Agree Realty, ticker symbol ADC. So what does ADC do? ADC is an integrated real estate investment trust primarily focused on the ownership, acquisition, development and management of retail properties. ADC is a 5.6 billion market cap company and has a price to FFO of 16.4, which is pretty okay, although I prefer a little bit of a lower number here, but nothing to worry about. Revenue is at 404 million, and in this graph we see that revenue went up really nice and steady, so this comforts me a lot. Net income is at 144 million, which gives us a profit margin of almost 36%, which is lower than the 5-year average, so that doesn't look that good to me. Dividends are looking great, and is of course one of the reasons why people love ADC stock. Dividend yield is sitting at 3.95%, which is pretty high of course. So this brings in a decent amount of money. Annual payout is at $2.79 and ADC also pays a monthly dividend of $0.24. Payout ratio isn't correctly displayed, and when we check the funds from operation we see that the correct payout ratio is at 64%. And again, this is quite common for a REIT. They have a 5-year growth rate of 6.9% and grew the dividends for 9 years in a row. Overall, a great looking dividend scorecard. The last part is about the price target. I'm using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. I fill in the different assumptions and I hit analyze. I'm only focusing on the discounted cash flow value since PE ratio isn't a reliable way of evaluating a REIT. We have a low price target of $68, which is a small drop from the current stock price. We have a mid price target of almost $78 and we have a high price target of $89. To me, the mid price target is the most justified here, which means they are undervalued. A few weeks ago I bought this stock for the first time and I'm happy how things are going. I'm planning to increase my position from time to time and collect the monthly dividends. For me, it's a buy at current prices and I can't wait to buy more shares in the future. Last stock on my list is Realty Income, ticker symbol O, the most famous monthly dividend stock and of course with reason. So what does Realty Income do? Realty Income Corporation is a real estate investment trust that invests in freestanding, single-tenant commercial properties in the United States, Spain and the United Kingdom that are subject to NNN leases. Realty Income is a 39 billion market cap company with a price to FFO of 17.6, which is a bit on the high side. I prefer a lower number here. Revenue is at 3.14 billion and in this graph we see that it's going up quite nice and steady. Net income is at 646 million, which gives us a profit margin of 20.6%, which is below the 5-year average, so definitely keep an eye on that number since margins are decreasing a bit. The reason why people love Realty Income is because of the dividends, of course. Dividend yield is sitting at 4.7%, which is really high and brings in $2.98 per share on an annual basis. They pay you $0.25 each month per share. Payout ratio displayed here isn't correct, and when we check the price to FFO, we see that payout ratio is at 82%, which is pretty common for a REIT. The 5-year growth rate is at almost 4%, and they grew the dividends for 25 years in a row, which is pretty impressive. Overall, a great looking dividend scorecard to me. The last part is about the price target. I'm using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. I fill in the different assumptions and I hit analyze. I'm only focusing on the discounted cash flow value, since PE ratio isn't a reliable way of evaluating a REIT. We have a low price target of $61, which is right below the current stock price. We have a mid price target of $69 and we have a high price target of $79. To me, the mid price target is the most justified here, meaning it could be undervalued at current stock price. I only have a small position with Realty Income and I'm planning to buy new shares and right now they look pretty interesting. Dividends are great and they bring in a decent amount of money every month. This was the top 3 monthly dividend paying REITs. I always like to collect a monthly dividend next to my quarterly dividends, but I always keep in mind that monthly dividends doesn't mean an automatic buy to me. So remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.